Hi, it's Lee and welcome to the Tesla Economist. Let's go through the questions that were asked on Investor Day and see what inferences we can make. The first question was probably what was on most people's minds about the next generation vehicle and what will be the timeline on this vehicle. But not just a new gen vehicle, more a paradigm shift on how vehicles are assembled and how batteries are put together. And will that be reconfigured into everything that Tesla does, implying retrofitting the current factories? Elon says the processes will mainly be for future vehicles, as retooling a factory means bringing it down for an extended period of time, which is something Tesla want to avoid. There will simply be different variants of the Model Y, some with rear casting, some with front and rear casting with a battery pack. But the whole unboxed approach with parallel production lines, it sounds like this will only be for future vehicles and not the Model Y. Lars also weighs in on this and says that Mexico will build our next-gen vehicle, but we'll also be doing that in our other plants. Expect that to be a huge volume product, which I think implies they'll be building this next-gen vehicle in the other locations too, or possibly some more new locations. Then we talk about the mining and refining, and Tesla basically say the reason they are attempting this is not to expand. This is not an area Tesla necessarily want to get into. They want to do the least amount possible, but if it is a limiting factor, then they will get into it if necessary. But the main reason is to try and show their suppliers improved ways of doing the processes. Tesla is asked how many models they think they need in order to get to 20 million units a year. Elon has said in the past that they will eventually make all types of variants. But Elon says that there'll not be that many. He says around 10 now, without appearing to give too much thought about it. If we include all the future models that Tesla have announced and the current models, then that does currently come to 10, with the Model S, X, 3, Y, Semi, Roadster, Cybertruck, Van, Compact, and Robotaxi. Although perhaps the Semi doesn't count as a car model, and the Roadster might not be included. If there are any more models, then we might expect a coupe or an SUV. The Van might also be a passenger minivan. And Elon talks about most manufacturers just end up reshuffling the deck and show different variants of the same car, and are not necessarily good variants. Elon thinks in the future there'll just be a limited amount of models, similar to phones. I think this is likely necessary when it comes to getting the cost down for EVs using economies of scale. The same for the other manufacturers too. However, we know roughly that there may be 3 million sales a year with the S, X, 3, Y and Cybertruck, and perhaps a few hundred thousand with the semi-truck. Now, this leaves a massive discrepancy between 3 to 4 million a year and 20 million for just the few remaining vehicles. The van may sell well, but perhaps 1 million a year might be around the max. So the compact will likely be a huge seller. Perhaps this will be massive, especially if they really have got the cost down to half of a Model 3. If the price ends up being between $25,000 and $30,000, then possibly they could sell 5 million a year. But that still leaves 10 million. So perhaps the rest of the production numbers is all about the Robotaxi, and that's where the real production will be. Even if they did add a few other models in like an SUV, they probably aren't going to sell close to as many as the Model Y, and likely not going to contribute overly to this 20 million figure. Perhaps the compact vehicle will be closer to 10 million sales a year though. I guess it's hard to know, but demand is exponentially higher at that price point. Then we're asked about China in regards to market share, and we're told that after the price adjustment, it generated a huge demand in China, even saying more than they can produce, which is obviously very encouraging to hear. However, the Chinese numbers so far haven't been quite as encouraging, so I guess we'll find out when we get delivery numbers for the end of the quarter. Tesla do tend to export the majority of their vehicles in China in the first 2 months of the quarter, so March will be the most telling month for this quarter for Chinese domestic sales. These were some big price drops, so we should expect demand to increase a lot. It certainly makes sense. But the economy itself may be suffering too, and overall aggregate demand for autos seems to be down in China as well, and we've got high interest rates, which don't help either. But they don't seem to be too worried about demand or market share in China. Elon also wants to bring up demand some more and says the overwhelming factor for people to own a Tesla is high. The limiting factor is their ability to pay for a Tesla. I mean, this could be said for a lot of products. A lot of people want products they cannot afford. I think Elon's point is that as they plan on getting costs down, then demand will increase. But he mentions price elasticity of demand, and it sounds like what he is saying is that when Tesla's prices do drop, that demand increases relatively higher than perhaps other such products. This could be due to the fact that there is this lower cost of ownership with a Tesla. For example, you instantly save money on fuel. And if you delete that saving from the sticker price, then if you lower the price, it becomes relatively lower than an ICE car, hence the elasticity of demand. Then Elon talks about how the autonomy adds so much more value that we've heard many times before. Next, they talk about the desire to own the vehicles may as well be infinite, and affordability is what matters. The hard part is building the car and entire supply chain associated and all the logistics, which is the main purpose of Investor Day, to illustrate how Tesla are able to lower prices and thus increase the demand. And then we get a question about the dry battery electrodes. Luckily, someone in the audience is paying attention. The factory is real and already making dry electrodes, and they're always making progress somewhere, and not close to stalled out on progress, on both anode and cathode side. They're even operating more than one anode line, with two different processes of the powder entering the line, which is interesting, and then they'll judge which process provides the better yield. It sounds like they have been grinding hard on dry electrode process, and it's obviously not been easy. But I'm inferring it's not a matter of if it's possible, but more a matter of when. And as I say, as long as they can eventually pull it off, then that's really what matters. But hopefully in the next year or so it'll be good, rather than several. Dry battery electrodes make all the difference in battery production quantity and cost. Elon does say that it seems likely they'll be able to scale it to volume this year. One last question on the next-gen vehicle, asking when we will get to see it, what it will look like, any details that they can share on the size, performance, or basically fishing for any more detail on that vehicle, which I'm kind of surprised no one else asked up to that point. But Elon declines that question and says there will be a separate event for that. That's hardly surprising. Okay, that's me going through the entire Investor Day with intense analysis. Thanks for those of you who entertained my ideas and thoughts on what was said, and I appreciate all your comments too. But to summarize it, basically it would appear that Teslas are a very popular car, but still slightly too expensive for the mass market yet. So the entire purpose of Investor Day was to show investors that Tesla are doing everything they can in order to reduce the cost of a Tesla. Through improved supply chains, vertical integration, lower cost sales, and new manufacturing techniques. Then accompanied by lower cost models that appeal to other markets. Tesla has plenty of demand, but it is hinged by the price tag, due to the fact that EVs simply cost that much more than ICE cars. Tesla have done so much to remove the cost from the traditional legacy auto models. No unions, no dealers, no advertising, massive vertical integration, using the best engineers in the world in order to improve everything they can possibly think of. It's all happening slowly, step by step, but clearly going to take some time. It is a new industry, and it needs a new supply chain with new processes and raw materials that were not previously in as much supply to become more available on this bigger scale. If there is money and profits chasing these supply chains, then they will within time scale. Of course, as they scale, costs come down and profits rise, which means more money can chase them and more economies of scale kick in. EVs are still in their infancy. Clearly, it will take time, but it's happening and the bandwidth is expanding. Tesla are doing what they can to help all their suppliers too, whether it be researching new, more efficient, low-cost processes of mining or refining, or spending time with them helping refine their production lines. Tesla have the best engineers and talent and are able to use that to every level of manufacturing. Compare any of this to any other EV manufacturer out there and look to the lengths Tesla are going to. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.